Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, and it's October 13th. We got a few things to go over today, and not much on the headline, the economic calendar. The primary item here is the weekly jobless claim. So last week we had 246,000 people apply for unemployment. Forecast supposed to have a slight uptick at 252, and again, it came in and based the same number at 246,000 people applying for unemployment again this week. So very low numbers here. We haven't seen these low numbers in actually decades here. So obviously that's a good sign here. Fewer people applying for unemployment. Also, a little minor one here is the import price index. So back in August, we had a negative. It pulled back, contracted 0.2%. In the month of September, it went up. So basically, the cost of goods went up a little bit here, 0.1%. So let's take a look here, and this is going to be the big one, is the headlines. Stock market's currently down. A lot of it is kind of a layover of kind of combination of what we have here, as you can see here. China came out with some pretty disappointing economic data here, of course. So they've been kind of on the back burner. A lot of people just kind of forgot that they're kind of struggling, and this is kind of a reminder. So this will probably be something that will keep on the investors going forward. You'll probably see them watching China a little bit more carefully as you know, they've been kind of chugging along, but nothing's really been thought about. And now some very disappointing data came out, and of course now that's on the top of their minds. At least a reminder is that China's still not out of this recession, or at least might be going to more of a recession here. Also, biggie, it was yesterday's FOMC minutes that were released. So it's basically showing that a kind of a big divide on a lot of the Fed numbers here. And when you see a division like that, it creates uncertainty, and investors don't like any uncertainty here. One of the big things that highlights that kind of hit a chord with me was there was a comment saying that the hawks were really pushing to get a rate hike, because if they don't do a rate hike, it could lead to a recession. Now, the last several decades, we've been actually going the opposite direction. So every time we go into recession, we're dropping rate hikes to try to stimulate the economy. So it kind of hit me that why would we be raising rates if by having low rates, we would go into recession. Now, this all stems from a friend of mine pointed this out to me. I talked to earlier because that kind of hit that chord. He pointed out that basically it stems from the hawks are kind of looking at the early 70s. Back when Chairman Burns was in charge, that he kept a low rate environment, interest rate environment going on this early 70s, and didn't keep up with the rising consumer prices. Now, in that time, he was trying to cut down employment. He was looking more at employment versus the consumer prices. As consumer prices are going up, it kind of forced later on in the 80s, Paul Volcker, when he took over, to kind of force ourselves into that long recession during the 1980s, and which led to very high interest rates. So that's what the concern is for a lot of the hawkish members. They kind of see parallels of the early 70s of what we're seeing today, and a lot of that was attributed to low interest rates at that time. So now we're seeing kind of a paradigm shift here, where perhaps too low interest rates could also put us back into another recession here. So it's kind of an interesting note to take on. Deutsche Bank's making the news. There's talks about that they're doing a hiring freeze so they can do some major revamping in their cutbacks on their different departments over in Deutsche Bank. As we know, they're having some issues with the Department of Justice with that $14 billion fine with their role in the mortgage-backed securities. Also, another note was Stumpf, the CEO and chairman, was going to be retiring immediately from Wells Fargo, which is not on here. But so banks are all in question here as a result as well. They're going to be releasing their earnings here soon, so they'll be looking at those here next day or two. The rising dollar is also a concern to these investors, because as the rising dollar is going up, especially this past week, dollar's got up about at least 1%. This is going to cut into earnings for a lot of these companies that are multinationals, like on the S&P, where it's going to cut into their profits on foreign with their foreign subsidiaries and everything. So this is going to cut into profits over there. So this is another reason that's going in there. So right now we're looking at more or less earnings reports that's kind of taking, of course, the overall geopolitical news and everything. And something else I didn't put on here was, of course, geopolitical, talking of, the U.S.'s role of attacking some of the communications on the Iranian-led Houthi rebels over there. And then, of course, Putin calling back family members of the Russians coming back home, that maybe there's some troubling news coming ahead, that maybe there might be some attacks or anything like that coming ahead. So, they're watching that as well. Oil, there was a huge report came out that there was a big oversupply of oil coming out here. So oil is starting to come back down a little bit in prices as well on there as well. So a lot of things all over the place today here, which is, of course, taking up on the time here. So I apologize for that. So let's go ahead and take a look here at the bond market. So this, as you can see here, this 103 level here became a floor support. We touched it. We even tried to go above it. Below it, we closed above it. And then today we started the day higher. So even though we're down for the day, we're up about 9 basis points from where we left off. So we might see some improvement here as the day goes on, continued improvement here. But right now, the prices are very similar to what we left off yesterday. All right, folks. I hope you guys have a great day. I'm sorry for the long recording, but a lot to kind of go over today. Hopefully you found that useful. Now, if you guys like to keep up to date throughout the day, follow me on Twitter at Mike Bjork, BJORK, and you'll see me posting different highlights or different events throughout the day on the market news. All right, take care and have a great day. See you tomorrow. Thanks for watching. Bye-bye.